Hello, what's up, traders? Welcome once again. This is Greatness FX, and today is Friday, 1st of May 2020. So, happy new month to you all. Um, as usual, you are to send your questions to me from Monday to Thursday, and I will answer all of them by Friday. So, throughout the week, I got just one question, and the person asked, how do you use the Fibonacci tool? Actually, I was supposed to make a video to answer it, but I decided to just make it a full topic, and I will explain how to use it in my tutorial video by Wednesday. So be expecting it on Wednesday. I will just teach you full on how to use the Fibonacci retracement tool. So because if I'm to answer it as a question, I will just brush through it and tell you what it is used for, but I will teach you full on how to use it by Wednesday. So today I'm going to quickly show you how to do multi-timeframe analysis with your phone, with your smartphone. For those saying they find it difficult using the smartphone to analyze, they don't have a PC, all sorts of things. So let's get straight into the chart and see what we've got. Sorry, let me switch on my data. Okay, you can see this account. It's a real account. This is one of my accounts. I use GoFX. Okay, the pair I'm going to run through now is Euro card, and let's go from the monthly perspective. As you all know, I'm a swing trader full-time, and I do multi-time frame analysis. So let's go and bring this logo here. Now, as you can see from monthly perspective, the market have made an impulse to the upside, and I told you after an impulse, expect a pullback. Pick that too. Okay, now this is the impulse. This is an impulse. Market is to make retracement before the next impulse. So what are we expecting now? We'll be looking for a long opportunity if the market will provide one of our entry at this region. But this alone can't give us a reason to buy. So what I'm going to do now, go on weekly time frame to see what the weekly is showing us before we start taking decisions. Okay, now from this chart, now the monthly time frame will have an impulse to the upside. The market pretended one red candle as a retracement candle, and the next candle was a bullish candle. So at this region, we'll go over to the weekly time frame to see what the weekly is showing us. Now from the weekly time frame, you can see something I always tell you guys. This is the area you make use of the Fibonacci retracement, because as you can see, the market never pulled down to this level where it was supposed to. Let me make use of the tool and show it to you. Now the market never pulled down to this level. This is the level we expected the market to come down to after okay, sorry. Okay, sorry. So after this impulse to the upside, we expected the market to come to this region before the next impulse to the upside, but unfortunately the market never gave this 1 to 3 move. Yeah, that's what some people call it as their strategy. So what if we were to take this trade, we would have been looking for a buy opportunity from the monthly. If you can see from here, now you can see there are two structural levels. I always say this when making my weekly forex forecast, that the market that gives two structural levels tend to respect the structure of the first structure level. Now there are two structure levels. This is one structure level here, and this is another one. If you look to your left, you have this. If you look, you also have this. Now I told you each time a market form a W over extended W formation, and there's a structure level here, sometimes it does not come down. It doesn't come down to retest this level. Rather, it will retest the one before that area. That is if it form an overextended W. Sometimes we just retest this area and move up without coming down to retest the neckline. So as you can see, we have two structure level here. So we'll adjust this box to make sure it's touching both structure level. This structure level 1, the market might turn here, and secondly we'll put another one again in case it is broken. So at this region, we are not predicting, we are telling you if the market gets here. All strategy are based on if the market does this, I will buy. If it doesn't do this, I will buy. So we are saying if the market get to this region and start reversing, giving us one of our entry rule, we'll buy. If it break it without giving entry rule, we'll leave it. As you can see, the market got there and got rejected by the resistance, support and resistance, and by the support zone, and the next candle that came out was a bullish candle. Now going down the weekly time frame, you can see it's the same thing we are getting here. The market got to that region and started going up immediately. If you also use the Fibonacci retracement, you see a Fibonacci 2 is aligning perfectly with this structure. Let me pick the Fibonacci retracement 2. Okay, this is it. Now this is an uptrend, and you take it from the low to the high to get to retracement level. This is the low to the high. As you can see, the market was rejected by the 50% Fibonacci, which is another strong zone. This is a 50% Fibonacci level. That's where the market got rejected. It went below it and closed above it. That's another confluence that this market is going to go up. To make the chart neat, that's why I'm deleting these things. So we do multi-time frame analysis monthly, weekly, and daily, and find entry from the R4. So what we're going to do, the last thing we'll be doing is going down the daily to see if it's aligning perfectly with what we have in higher time frame. Now another confluence you can see here now is that when market opened, it created a gap for the previous period, and each time you see a gap, sometimes the market let's say 90% of the time, the market comes down to cover up this gap before going in its intended direction, which is the opposite direction. So as you can see, after this gap, the market came down to this level to cover up that gap before moving with this impulse. And from higher time frame, we already see that we are supposed to be buying. So after the market has gotten here, what are we going to be doing? We'll just go on a lower time frame and take our entry if one of our entry rule is satisfied. As you can see here, if I was to take this trade, I would have been in profit since because one of my entry rule was already satisfied, and it would have been close to my TP if it would give me a 1 to 3 risk to reward. So these are to do multi-time frame analysis. You go on the monthly, weekly, daily, and find entry on the R4. You might ask, why don't I go down R1, 30 minutes and 50 minutes? Those are much smaller time frame, and day trader use those time frame most times. So though I use them too for my day trading strategy, but I'm a full-time swing trader, so I don't day trade sometimes in weeks. So only when I just feel tired and I need something to do. Sometimes I can't stay away from the charts, so I just day trade and take some pips from the market. Okay, let me also quickly show you something here. The mistake most people make, because some people just follow structure. Each time you see a structure, they'll follow. If some people are to take this pair, this is an M formation, and after this M formation, what did the market do? It went to retest the same zone and started coming down. Some people will say at this level, without knowing that the market will reverse here. Why won't they know? Because they didn't check higher time frame. Higher time frame will give you a region where the market tends to reverse. Now those people who sold at this region, market must have hit them out either at break even or hit their stop loss. Why? They think they can get a 1 to 3 risk to reward here. So that is why, according to our trading rules, we don't take any trade that wouldn't give us 1 to 3 risks to reward. That's the minimum we take. So as you can see, this one is already giving a minimum. Let's say this one's giving a 1 to 2 risks to reward. We still need a move to the upside, at least a bit, to hit 1 to 3 risks to reward. And sometimes we get 1 to 14, 1 to 16, 1 to 20 risks to reward. Depends on how long you are willing to take the trade. So this is all for now. Multi-time frame analysis with your phone. By Wednesday, I'll quickly show you on how to use the Fibonacci tool. So if you are the one who has the question, please be patient with us. And for the Forex weekly forecast, tomorrow is weekend, Saturday. you get it published, and the review of the previous week, everything will be uploaded here. Also, I want to quickly use this medium to let you know that our website will be up and running by Monday, a place you can go to learn Forex for free, except our strategy, which is meant for the student only. You can go there to learn Forex for free. And if you're a Forex trader already, you can go there to just get used to everything and be a master in the field. If you wish to learn our rule-based strategy, because it's a 3-1 strategy. Yeah, 3-1 strategy. It's a 3-1 strategy that have one powerful entry rule. One powerful entry rule. So anytime we see any of our strategy in the market, we look for the entry rule, and if our entry rule is satisfied, we take the trade and get a 1 to 3 risk to reward. So if you want to learn our rule-based strategy, you can just get our contact details from either our YouTube channel. You can get it from the website. The website name will be, the URL for the website will be announced soon, but for now I can't disclose that because we are still working on it. So you can always contact us for anything. Don't forget to subscribe to this channel, so you can get notified each time we upload a new video. I think this is all for now. Thank you very much.